If you're not in China, where the cost structure is unparalleled or the productivity is unparalleled and the innovation is more and more today, then you're not really quote unquote training with the best. So you have to be present and make sure that you are on the treadmill every morning so that you are also then competitive elsewhere. That is not only what we believe, but also what I can see that many other companies are having as a philosophy also.
Imagine for a second having a bird's eye view of the value chains we all depend on. Suddenly, we would be staring at an endless flow of moving parts: containers crossing oceans, trucks and trains in motion, goods entering and leaving factories. Chances are, these moving parts have to be hoisted up and down dozens of times before reaching final destination. For that, you need a vast amount of lifting power. Ship to shore cranes, gantry cranes, winch cranes, you name it. The universe of cranes is vast and diverse. Their activity tells us more than we think about the health of supply chains, the direction of investment, and the impact of geopolitics, automation, and sustainability. Few companies illustrate this better than Konecranes, the Finnish group of 16,500 employees in 50 countries and one of the very few Western alternatives to Chinese crane manufacturers. As global value chains reconfigure, its ports, industrial, and services divisions are positioning to succeed in this new world. Marco Tulokas, the CEO of Konecranes, joins us today. Marco, thank you for being with us today. The Trump administration has targeted imported cranes with its tariffs as part of efforts to redevelop and boost domestic shipbuilding capabilities. In your latest earnings statements, with specific regards to tariffs, you said that recently the situation has become more challenging. So, why is that and what are you seeing?
There, the project which we have put in place already once we learned about these tariff changes already almost a year ago, of diversifying our already global supply chain to match these needs and the customers' requirements is proceeding well. At the same time, it is something that while the opportunity for us and the other Western players is significant, but it's also something that is large effort, not particularly distinct or clear, but also something that time-wise takes long time to consume. So it is not an imminent and direct opportunity either, although it is a big opportunity for sure.
How have you adjusted to this new reality of doing business in the United States? I know that you have plans to gradually localize more production inside the United States. How is that going?
Well, again, here we have to look at different segments of products in a different way. The port equipment, generally speaking, there is very little local production capacity at the moment for us and others also. So that is something that one has to gradually increase so that there is more US made content, as well as diversify the supply chains. Our Konecranes, relatively speaking, we feel that we are in a good position because we are a very global player. So we have a supply chain that is being built both on industrial and port side to match different scenarios. We have a very broad subcontracting network that we have been now also diversifying or expanding even further beyond our earlier or existing capacity in China also.
I mean, what are the challenges there to move production to the United States?
The main challenge is, of course, just the sheer size of the capacity needed, the steel structure manufacturing capacity related competences that one has to have in place, and that is not immediately and readily available. And these are very large pieces of equipment, several thousand tons of steel and a lot of man hours that just goes to building one piece of equipment. That is not readily available, such capacity in North America at the moment. There are other segments that also compete for the similar kind of both manufacturing capacity and also the raw material. The cost structure per se or also is something that is higher, of course, in the North American market, and that is something that the customers have to deal with then also in the end.
You recently said when talking about your industrial equipment segment, you recently said that when the supply chain moves, manufacturing capacity moves, which calls for new investment in new cranes.
Mm.
So, what is your order book in the industrial segment telling us about the reconfiguration of global value chains?
Well, first of all, the order book has increased from last year, and that's of course a very good thing, in particular in this situation. The repatriation or changing of the manufacturing location, that is something that is clearly a trend and it's happening. But it is, on the other hand, at the same time, somewhat difficult to distinguish uh, from the other elements of growth, which there are several, also in the industrial side. So the direction is clear, timing and impact is unclear. So there are other elements or other things that also driving growth coming from or also like mentioned, the port size, the demographic development, the drive for a higher level of automation, the sustainability trends, and also the material price, the material cost inflation that have been driven into the market, and they all drive growth in their different ways, at least growth of top line, and just the impact of how much of that is related to the repatriation of manufacturing is somewhat difficult to measure, but it's clear that it's significant, but it's also early stages, and it will require quite a lot of resources, and there will be a cost impact also related to that. At the same time, there is some evidence of the contrary visible, meaning that now in the context of China, that companies are also investing in China, are continuing to invest in China, and that is also interesting to see.
So you mean Western companies or international companies continuing to investing in
Yes.
China and requiring your cranes? Why do you think that that's interesting?
Well, I mean, because the most of the narrative seems to be that the repatriation or deglobalization drives manufacturing away from countries like China. But it's also interesting to see that that is not only the narrative or the direction, but it is to the other direction also.
Do you feel these investments they change in nature in a way that they are more targeted to serve a final consumer and customers in China, or they are still looking at the exports market from your client's perspective?
I think there is two reasons. First of all, it's like you put it, it's China for China. But I believe it's also, and it's the same for us, is that, and I personally believe, having also lived in China in the past and admiring in many ways that approach, and if you're not in China, where the cost structure is unparalleled or the productivity is unparalleled, and the innovation is more and more today, then you're not really quote unquote training with the best. So you have to be present and make sure that you are on the treadmill every morning, so that you are also then competitive elsewhere. That is not only what we believe, but also what I can see that many other companies are having as a philosophy also.
You mentioned a couple of times demographics and how demographics is driving business to outsourcing and also to your services offering of maintenance and repair of cranes. And China is facing a demographics cliff edge,
Uh,
as well as obviously many European countries and other advanced economies. Tell us a bit more how demographics is impacting your strategy and creating opportunities also for your offering.
But the I guess most obvious impact of that is that the short supply of skilled labor, whether it is on service side or manufacturing side, drives the level of automation, higher level of automation into the equipment that we or our peer companies produce and that our customers use, and it drives kind of a higher level of integration in the facilities, and that of course is in the interest of a company like us and very much part of our technology vision and our strategy.
Marco Tulukas, CEO of Konecranes, thank you for being with us today. Really appreciate it.
Thank you very much, Jacopo.
Thank you everyone for watching. If you're following this on YouTube, please like and subscribe, or else follow us on our website, fdiintelligence.com. Until the next time.